All right,
All
welcome
right.
back to the It's Finance Mate podcast, episode two. Today we get to speak about the super exciting and very German topic of insurance and why Germany is obsessed with insurance. There's actually five times the amount of insurance policies in Germany as people. So yeah, it's a very, very big part of society here and the economy. Um, all three of us actually worked in an insurance company before,
Mhm.
so we have a little bit to say about that. But insurance is a big part of finances in Germany and a big part of financial planning. So maybe first I'll just hand over to Alex, maybe to give us a little bit of flavor about why that might be and how insurance features in planning in finances actually in Germany.
Thanks, Graham. Thanks for the handover and the introduction. I would, yeah, interesting way to put it. Like five times as many insurances than people in Germany. I would have just,
Insane, no?
no, I was just said, the average person has five insurances, but an interesting way of dramatizing it. But yeah, like compared to, I think, other European markets, it's pretty insane. And I think you have some insights also on how that developed, but let me maybe give some insights of why we're talking about it today, because generally what we do is not insurances, it is financial planning. Insurances is a part of it, I would say, but we're talking about it, at least from my perspective today, because the German market is an insurance market. If you want to save for retirement and you go to a bank, you go to an insurance company, you usually talk to somebody that sells you insurance and will tell you that insurance is the best thing as an annuity, lifelong payment, and so on for your pension. That's generally how the market works if you want to start financial, say, if you want to save for retirement, if you come up with that idea. And then usually what happens is that they will also talk to you about all the risks of, like liability and so on that you can assume, and why you need home content and private liability and private health insurance. And then, yeah, the whole market is I would say a sales market, and pension is usually then pension insurance in Germany. And I think that's the topic that how we enter that discussion. But today, I think it would be super interesting also to understand why the German market is the way it is.
Yeah. So I mean, in our time working in this insurance company, I mean, we actually started a insurance company, as in we were there before it was an insurance company, meaning it didn't have an insurance license, and it got an insurance license, so became an insurance company while we were there. We had also some really senior industry experts on the team, and I always remember one of them told me this sentence: insurance is the difference between perceived risk and actual risk. And I thought that was a very nice way to put it because, and I mean, maybe Augusto, you can talk a little bit about this too. Actual risk is something you can estimate. I mean, like calculate to an extent, right? With a lot
Mhm.
of assumptions and stuff. And basically the margin that the insurance company makes is the difference between how risky do people think this thing is
Mm,
and how risky actually is it?
yeah.
Because the insurance company pays for the actual risk, but it
Mhm.
sells the perceived risk, right?
Yeah. I think there's a very interesting. So I worked in the same company, and I was leading the data division there. So I kind of had to learn very quickly how risk modeling works in the insurance industry. And I think we said the word insurance, like about 50 times by now. I find that pretty funny. Um, but yeah, so there's a very interesting way in which the concept of risk is thought about in the financial world in general. So like financial professionals, how they think about it, and how the insurance industry thinks about it, and how they parse it. And it's very different from how, at least, okay, if you watched episode one, you know that I come from a place with a very weird financial culture. And
Called
so,
Argentina.
especially with that background, it's very different from how people perceive risk, kind of in day to day conversation. And so, what Karim was saying exactly right just now. You may have in a place like Germany, for example, you may have like people who are very aware of their risk exposure, and they say, you know what, like I can pay 11 euros per month and cover myself from I don't know, like the possibility, the remote possibility that my house catches fire. Um,
So I mean, let's go a bit back, right? Like
yeah,
let's talk about like how insurance started.
okay, let's go with that one.
Where the concept like even comes from, because like in a weird way, like insurance is actually something very almost communist, right? Like it's very socialist sort of um um uh, idea, like this idea of this collective like sharing risk together, and like when things happen, everyone carries the burden, right? Like you can think of it. Yeah, go ahead,
Pretty
Alex.
much.
What did
Yeah.
you have before insurance, right? I think like before the concept of insurance, you have had your family. I assume that is still like how you do
And
it.
tribes, villages, tribes, right?
So if something happens, right? Everybody would kind of, or at least your family, right? Your family would probably take that financial risk, and depending how big it is, like it's gonna be a heavy burden to carry. And it's if somebody lost a limb, for example, lost a leg, then everybody else, like either you let that person die, part of your family, or you support them, right? And you have to come up for their loss of income as a family, right? Which can be financially pretty detrimental. But yeah, I think historically the concept developed a bit different of insurance,
Yeah,
like
I mean,
right. But yeah, I think that's
like
yeah.
like the first sort of topic, like most people in the insurance industry like refer to as like the real like inception of insurance as a concept. It's sort of more this 14th century, like these Venetian merchants, doing a lot of trading across Europe, and in these times, I guess what would be medieval, like end of medieval sort of era. Ships weren't as sturdy as they are today. So there was looting. There were ships that would just sink. The load was too heavy. The ship was badly engineered, whatever it may be.
Stories.
And like I can't remember the exact number, but like a bunch of these merchants like came together because what they realized is some of them had lost like a ship before, and then it would so significantly impact like their wealth, right? Like imagine like on the ship carrying whatever they're trading, and they lose it all in one shot.
Mm-hmm.
And as aristocratic families do, they band together. And they basically just sort of made an informal agreement together. Why don't we share the risk of our ship sinking? Because it's not necessarily something we can control. Like sometimes it's about the weather, sometimes it's about the engineer, whatever it may be.
Never see.
Yeah, the sea, all the stuff, and if one of us loses the ship, we all carry the burden together. Like when you frame insurance in that light, it's almost romantic, right? Like it's sort of like it feels very wholesome, like it's very collective, like we're all sharing the risk together. If something bad happens to one of us, like we all pay the price, right? And yeah, that's a
And
very nice way to start.
in a way, it is a way to, because in that context, right, in a context that you're mentioning, let's say Mediterranean trading, the only people who can really benefit are the ones who can shoulder, like the only families or the only enterprises that can benefit and grow are the ones that can shoulder losing 2 3 ships. So in a way, like these schemes are the decentralizing forces. They push the market into, okay, like now a lot of smaller traders can work. And if you're mentioning the early Renaissance, I like to think the first, this is far off, right? I like to think the first insurance scheme, I would say, was the early civilizations, like Sumerians, Egyptians, because in the end, like what they were doing is like they're collecting grain in a
Yeah,
shared silo, and
yeah, yeah.
when the crop goes bananas, you just have grain and you don't die. And if it's just like a little village doing that, you don't have as much. You don't have like that ability to transfer risk in different directions, like be it forward in time or across different people. And I feel like that is the way we need to think when we think about overall, when we're thinking about our finances. That's the way we need to think about our risk. It's like it is something that you're like trying to distribute somehow, either through time, through other people, instead of like getting you like the entire bill for, say, the edge case that your house burns down.
Exactly. Exactly. And I mean,
It
that's like
doesn't happen
actually
to anyone here.
like coming back to Germany, right? Like, I mean, yeah, I like history a lot. So I looked also a bit
My
into
friend.
history of insurance, and like it does seem that actually for Germany specifically, you mentioned like, you know, your house burning down. Like that's actually the first sort of official you know, like public insurance in Germany. So like in the mid 1600s, like in Hamburg, there was a lot of fires, and you know, there actually the state of Hamburg at that time created this sort of joint pool, like to basically people could pay into, and if your house gets burned down by a fire, you get paid out. What's super interesting about that one is that still exists. It's now owned by a bigger insurance group. But this insurance policy actually still exists till today. So this it's known as like the longest standing insurance policy in history, and that is in Germany. So pretty
Where else
interesting
would it
one.
be?
I think that one is called like Hamburger Feuerkasse. Huh? It's
Yeah,
like you,
no, that's the
Mhm.
one.
Yeah.
but like somehow I'm thinking of like, you know, those signs on the buildings that pretty much like was a sign for the fire department on who actually paid the
Yeah,
contribution for like is that the same thing, right? Like because one is
I think it is.
we're down, and the other one is like if you paid in the fire department, if you paid your contribution, then actually your house was saved, right? And maybe the house next door, just because like if the house next door burns down, like you probably also yours burns down. But I think that was it, right? You paid for the fire brigade to actually know, like, and if you didn't pay into it, they would just let your house burn down.
Yeah, it's crazy.
It's true.
You didn't pay.
I'm not sure if that was the case in Hamburg. Maybe Karim or I mean, you guys know. I know that was the case in Victorian England
Yeah,
Yeah, yeah,
in
yeah.
early, and they even had different companies, and so like you needed to pay if like company A was there and they see the shield and it's not. I think it was like that. I'm not an expert in this topic, but
Yeah, yeah, it was. I mean,
vague
like,
recollection that companies would say like, oh, it's not mine. Sorry, whatever.
I get all my
yeah,
knowledge like that actually from walking tours when I go to different cities, you know, like Copenhagen or something, and they're like pointing those things out. They're like, here, by the way, here are insurance contracts for ship merchants were actually closed, or like this was where you would get your fire insurance, or this is a sigil of, you know, like that house was insured against fire. Um,
yeah. But I mean, so like maybe actually, Alex, like maybe it's helpful also for people watching, like to just understand like what different types of insurance exist, you know, because like at least I know in Germany and probably the world, like there's really three main categories, right? Like there's health, life, and property and casualty, or sort of stuff, like insuring the cost of stuff. But yeah, maybe just like a little bit more about like what insurances exist, what risks do you actually get protected from usually, and I think that
yeah,
could be helpful.
yeah, yeah. And there's one other category which is pension insurance, I think. And I mean,
Sure.
these are like
Maybe life, I don't know.
yeah, yeah, yeah.
Yeah,
Like the categories are sometimes, you know, a bit different, but yeah, I think that's right. Like health insurance is a big one. I mean, in Germany that is mandatory. Germany actually has a very weird system compared to all other European countries, having two different health insurance, yeah, like options, private and public. Usually, like private is uh, add-on to public, you know, that you, if you want a little bit more, you pay on top, which I think makes a lot of sense. Public is, I mean, in the idea, everybody has health insurance, and then if you want a little bit more, you know, you pay some a little bit on top. In Germany, that's not the case. In Germany, it's completely separate, which like leads to very like super weird um or it's super difficult to actually figure out if private health insurance makes sense for you or not, because if you get it you might not come back, and you know, like you need a certain amount of salary and all. Like it's very complicated, I think, in Germany. That was talking about getting rid of it, but I don't see that happening anytime soon because politicians get private health insurance, they're pretty happy with it. um
exactly.
so that's the topic of private health insurance. We could probably do an entire episode about that topic. You know, like does private make sense? Should you stay in public? You know, what are the pros and cons? We should opt for which one. Anyway, so that's health insurance. Then you have your topic of insurance, so property and
Casualty.
casualty. Exactly, property and casualty. So all your home content insurance and pretty much liability insurance, all those topics. fall into that one. Like Germans love that category quite a bit, I think. And that's where, like the numbers of 5-to-1 ratio, I think, comes from. Like people have home content, private liability, car liability,
Everyone I
accident.
know has the two. Like
Like
liability and home contents, everyone I know has them. That's
you mentioned Kareem at the beginning before you cut me off at that point. And I know you have something to add, but you mentioned perceived and actual risk. And Germans think that accident insurance is like pretty much number 2 spot of insurances that you should have. Everybody has accident insurance.
Interesting.
But like in
I know
terms
why, but yeah, we'll talk about it in a bit. But
perceived risk, I think, and it's pushed hard. It's, I think, the has the highest margin for insurance companies. Like it's a 30% margin because people think it has a lot of risk and they're willing to pay for it. But actually, they don't. Insurance companies don't need to pay out a lot because the actual risk is pretty.
very low.
I mean, it's not. I'm not going to say low, but much lower than what people think it is. So that it has a highest margin. Insurance brokers and like to push it, sell it because insurance companies too.
yeah, but I
That
guess it has the severity impact, right? Like so, like if you do actually have a accident, it's life changing in terms
Yeah.
of not just your life, but your entire financial situation. Could be. I mean, depending on the accident,
Yeah,
obviously.
could be, and how the insurances, they're very big differences, but usually the thing that would make a really big impact is occupational disability insurance.
Mm-hmm.
Um, that would, like, you lose your income, and that is a financial risk usually,
Hmm.
and it is not covered by, or it's not meant to be covered by accident insurance. Accident insurance, I think, comes from like factory work. You lose
Mm-hmm.
your hand, and then you cannot do your job anymore, and you get some financial compensation. In today's world, I think it's a bit nuts. Like if you lose a finger or something, you do get a little bit of money, great. And sometimes the money makes sense. For example, if you end up in a wheelchair, with that
Yeah,
money, you can probably get a chair lift for your second
yeah,
floor,
yeah.
those kind of things.
I mean, like, given the type of work that we do, like desk work, like more no knowledge oriented. I mean,
Mm-hmm.
yeah, the risk
Yeah.
of me typing so fast that lose my finger is pretty low, I'd say.
Yeah.
But yeah, if you're, like working in a factory with heavy machinery, I see why that makes sense.
Yeah. And also for people like in desk work or who do a lot of computer work, cyber insurance, for example, it's still budding. Like I know from industry insiders that they still very few people know how to price it correctly,
Yeah.
and so like prices are a bit all over the place. I think
But
because
again, I think a big perceived risk, what's the actual risk? Very hard to price. I agree.
exactly it's very. And sorry, Alex, I'll hand over to you, but like I really want to hang on this one because the idea of perceived risk. So I like to compare two very like the two that we talked about just now. So like something like health insurance, for example, we all go to the doctor, right? And we all know or can imagine how much a doctor costs, like how much their hours cost. So it's a very tangible. You can almost think of it as a subscription, right? You can say like, okay, I'm going to go to the doctor 10x. My health insurance costs like X amount of money. I know that like this is evening out. Like the financial decision is pretty obvious, and it's mandatory everywhere. So no brainer. The things the risks that are harder to comprehend, perhaps, are like these are like very like what call like long tail or like very rare cases with insane amounts of damage. Liability insurance, for example, you do something stupid. We all make mistakes, and you do something stupid and you hurt someone, and you're saddled with like €1 million in a claim, and you have to pay that person. And that's like you're done. Like your life, your financial life is ruined. So, something like liability insurance covers you 1 million, 10 million, 5 million for like $3 a month. And like
Oh, liability insurance is a super interesting one. I mean, I remember because we did a lot of research on this in the company that we worked. But I don't know if you guys remember the percentage penetration of that product, as in like what percentage of people living in Germany have liability insurance? Do you remember?
Over
pretty high,
80%.
no?
80,
It's
yeah,
insane, yeah.
83%.
Because it's a
83% of people.
yeah. And it comes. I think it's also. I personally think it's a bit cultural. Like if you're growing up in a culture where like insurance is a big thing,
Yeah.
you see that like you see that liability kind of hanging around, like, oh, maybe I can do something stupid and maybe I can land myself
Yeah.
a million, 2 million liability. And in your mind it's like, okay, I can get insured for that. And perhaps when you come from different places, you come from different cultures, it's like you don't even think about that.
But that's exactly the point. Like, I mean, I have a really funny story with liability insurance, actually.
Okay.
Um,
Never imagined I would hear that phrase in my entire life.
but generally, you're right, right? Like people assume you have it, right? Like people assume you have it. So they act accordingly. Also, the law assumes you have it. So sort of the damages that maybe you get like charged in court, assume you have liability
Mhm.
insurance. Anyway, I moved into a new apartment 2 years ago, and I was hanging up my TV. So, I was drilling into the wall like to hang up my TV on like a stand, right? My next door neighbor hadn't moved in yet. I hadn't met him at all. The first interaction I had with my next door neighbor, it was like knocked on my door. I was assuming he's gonna come and say like, "Oh, hello, I'm your neighbor." He was like, "I'm your neighbor and I have 6 holes in my wall." So basically, like I
That
drilled
was
through my wall, like into his wall, and he could see exactly where I hung up my TV because, like, literally, I got it every single time, like
how
on the
long was
other
your
side.
bid?
Yeah. I don't know. I was like, oh, I want it to be stable. I'm going to use the big drill,
I'm gonna drill 7 meters into the wall. This is gonna be like the most stable TV in history.
Exactly. But you know what? Like, as also as an expat, I offered him, I felt like super ashamed, right? Like, and like, okay, like this is not how you want to start off a relationship with your new neighbor, right?
Yeah, drilled your wall.
Exactly. So I basically was like, okay, cool. You know what? Like, I can come by tomorrow and like try to repair it for you, or I have liability insurance. Why don't you fix it? Send me the invoice, and I will send it to my insurance company, right? Honestly, I think that saved our relationship because firstly, he's like, okay, this guy's responsible. He has liability insurance, like he knows how to live in Germany. So it sets an impression, right? Like, okay, this guy's integrated, like he has all the good stuff. And ultimately, I mean, the guy repaired it with a professional, maybe included some extra painting and whatever that he wanted to do anyway. I don't care. My insurance company paid for it anyway, so whatever, as long as the costs are reasonable, cool. And ons probably saved like a weird neighborly relationship, right? So thank you, liability insurance.
Yeah,
He hung a TV from his own side. It's like send your insurance a bill. It's like a 60-inch TV. The only way to fix it really. There's no other solution.
Karim, you going over there and trying to fix it yourself definitely like would have like ruined the relationship for sure.
Yeah, I
I'll
agree.
just use the same logic I used to drill like 7 meters into the wall. But anyway,
I'm glad he picked option B.
yeah.
Um, and that
So
is,
you're
I
saying,
think, a
Alex,
good comparison to. I think, Karim, you told me in Egypt, for example, you don't necessarily have car liability insurance, even, right? Car liability is it's mandatory in Germany. Without it, you cannot register your car. If you don't have it, they actually tow your car. So like you should have it in Germany. It's one of the mandatory insurances. But in Egypt, like, how do you? What happens if somebody like if you damage somebody's car? You do hit and run, huh? Like it's like it's like
I have, yeah, I have also another story about that. I mean, I was in Egypt. When was this? Maybe 8 years ago, 9 years ago. I was driving on a bridge actually, and one car like moved quite weirdly in front of me, so I like slammed on the brakes, and then another car like slammed in the back of me. So it's very clear that like they were speeding on a bridge. They hit in the back of me. I mean, that's not like something I could really avoid either. Like the car in front of me stopped, so I had to also stop. And if you ever see an accident in Germany, it's very orderly in a weird way.
transactional.
Yeah, because people just get out their car straight away, phone, camera, take photos, like get the license, exchange licenses, take photos of that, get all the information. And then if they can drive off, they drive off. If not, they call ADAC and they come pick up the car. Everything is solved in like 20 minutes, right? For me, like that thing in Egypt, took like 3 hours. Like we literally shut down the entire like biggest bridge, like going across like all of Cairo because what I realized is I was insured, like my car was insured. He also hit me in the back. I didn't really care. It would be repaired. Everything is fine. But what I realized is he didn't have insurance, right? So for him, he basically like totaled his car. Like there was like oil and stuff like
Oh,
on the bridge. Like it was obvious
yeah.
that the car needed like either a total loss or needed like really significant engine repair. And he spent 2 hours screaming at me about how I'm going to buy him a new car. And I was like, that is not happening.
It's
I am
like,
not buying you a new car. You hit
it's like
into me.
screaming insurance.
Yeah. So again, like when you don't have insurance, it just creates this weird dynamics where you fight it out. I don't know.
Yeah.
How do you work out who pays, right?
You know, like a funny thing is like Argentina has like is a bit of a middle of the road situation. So we like you have mandatory insurance, you have like third party liability mandatory insurance when you have a car, and the smart thing to do is always get full risk, and you get a good one. And the range in the market is pretty big. Like you have a good insurance is going to cost you X, and like a crappy mutual mutual la salchichita is going to cost you like 1/10 of an X.
Mhm.
And I don't know exactly why. I think it's like the regulation here is a bit more tight around insurance. There's a lot of like transparency laws. Like I mean, having been on the other side of that, it's like yeah, insurances cannot get away with a lot. Um, and it's always as an insurance company, it's always easier to just if you don't know, just pay out the claim, dude. Like it's easier for everyone. If you want to like sneaky not pay, it's gonna be more expensive. And Argentina is like a bit more flexible on that. So like a lot of the lower quality insurances just don't cover things. So usually if you have a crash between like two, like two clients of La Caja, which is like the one of the big ones, one of the good ones, you're fine. You have exactly that interaction that like very transactional, like number, picture, call the police if you need to. There's a report. Good night. Everyone goes home. If you have a crash between like with a person that has like crappy insurance, you end up in the situation that Kareem is describing. And that's an interesting thing that actually creates a lot of mistrust. And like
Mhm.
a lot of the reasons why like insurance, like personal insurance penetration is not big at all is because it feels a lot less, it feels a lot more vaporous, a little less defined. It's like, what are you buying? You're paying this guy, and then like you're gonna come with a claim, and they're gonna be like, oh, but we only cover these risks on Tuesdays if it's raining.
Mm.
So yeah, I don't know. It's yeah.
What do you think, Alex? Like also in Germany, I mean, I know the regulations around like claims and the ability to pay. I think you like really have to prove that it's untrue. Like if you have any doubt, you just have to pay it. Is that correct?
I don't I don't think that's the case necessarily.
Okay.
I think how it works generally from claims management point of view, right? From the insurance companies.
Yeah.
You hand out your insurance, the terms are pretty defined, and they oftentimes cover for a lot of insurances the important stuff. For example, private liability insurance or car liability insurance, the expensive stuff is covered as a
Mm,
main part of the insurance.
yeah.
Legal insurance and so on is a different story. Like they try to really cut out the
They're
important
also a
stuff
lot more expensive.
because it's not affordable anymore. Because it's sometimes in your hands. For example, with legal insurance, let's say divorce is usually not covered because it's expensive, and you could get the legal insurance because you know you're gonna have a divorce, and then
Yeah,
that.
yeah, yeah.
But this is a bit of an issue there. Anyways, coming back to claims, you have your terms and conditions, and those are just a legal ground, right? So somebody bought a promise that you're gonna pay if this happens, right? And then the insurance company has people there that know their terms and conditions pretty well, and then they assess what happened, and then they try to figure out if they need to pay or not. And then there are two different types of insurance company. Let's call it this: there are insurance companies that are that have shareholders and that want to make as much money as possible and hand that profit out to shareholders. So they have an incentive of not paying out too many claims. And then there are insurance companies where the shareholders are actually the people
The
that
policyholders. Yeah.
exactly. In that
Mutual.
case, there's not this incentive of, hey, we're gonna pay you like a huge dividend, but rather like we need to make sure that our insurance premiums are not exploding. I mean, that's the case for both of them because, of course, if insurance premiums explode, then you sell less insurance. Also, nobody wants that. So
The
they
insurance premium is just the price of the insurance policy,
exactly that's
just
price
because
of
it's a industry term. Yeah.
and you pretty much you try to keep claims away or like reject claims to not explode the prices of your insurance policy for everybody else, right? So we really try to figure out as an insurance company, is this covered as part of our promise, right? In the terms and conditions, or is it not? And of course, there can be disagreement, right? Not everything is black and white. And my family has had a lot of arguments with insurance companies about if it's, like it should pay something or not and how much, whatever. So this is usually when it's good to have a legal insurance. If you do fight a lot in Germany, in that case, I think Karim just dropped. You can, and also ideally, your legal insurance is a different company than your main insurance companies. For example, if you have an expensive claim with your occupational disability insurance company, ideally they're not the
They
same
want to
company.
make sure it's
They're
not.
not
Yeah.
going to fight themselves.
Yeah.
But yeah, so what I'm saying is you have a legal basis, right? You have your terms and conditions. And then based on that legal basis of the terms and conditions, the insurance company tries to evaluate if they need to pay or not. And then you need to, if you don't think that's correct, you need to fight it. And if you like fighting, legal insurance could be a good investment. And because you would have to usually, make a case for yourself. And if the insurance company don't disagrees with your assessment, then you would need to go to court and let the courts decide.
One thing that I always think whenever, especially us that we've been imbued in this market for like a couple of years, perhaps we take for granted. I know a lot of people, they see like big companies saying, "Oh, this is covered, this is not," and it feels, perhaps for many people, it feels arbitrary, or random or sneaky. Um, and you guys were saying something about, we reject claims or we do XYZ to keep the premiums, to keep the monthly payment low. Perhaps it's very good to like give a very high level understanding of what is the connection, right? Like, perhaps it's intuitive for some people, but basically, as an insurance company, you are regulated directly by BaFin. Here's like the financial regulator, and one of the things that they check very deeply, very aggressively, is that you have reserves, you have money to pay for claims. That's like, if all the risks that you're covering manifest, you have the money to pay for it. And that is something that there's an entire profession, it's called actuaries. There's an entire profession dedicated to making that connection. They're saying, what am I covering? How likely is this? How likely is that a person that I have right now is gonna make a claim? So this is what you were saying, for example, about why legal insurances don't cover divorce. That is because it's likely that people are gonna have a high concentration of people claiming that, because they're taking the insurance policy shortly before having a claim. So there's a lot of like these like
I
terms.
feel we're going like a bit too technical here. Like, I mean, we know a lot about this topic, right? So I
Yeah.
think we need to like come back a bit to like
Yeah.
what we also want to talk about why Germans are so obsessed with insurance. Like,
Hmm.
what is it about Germany
Yeah.
that really makes insurance so core, like to finances here? I mean, I think that's sort of what, yeah, what's interesting because it's very different than other places.
I
What do you think? I mean, Alex, I mean, you grew up in Germany, you're German. Where do you think this comes from, or like culturally, like maybe what do you observe?
I would say, first of all, there's a lot of marketing, which probably comes from having a lot of insurance companies in Germany. And then the other part of it is, I think it's very sales driven. And I think if you have a
Hmm.
strong sales drive, you end up with people that have a lot of products. In Germany in the 70s, compared to other countries, even like the US and the UK and so on, you had like a rise of insurance companies or brokers that they were setting up very aggressive door-to-door sales, and it was a bit of a snowball pyramid, not pyramid scheme, snowballing system where people would be incentivized to recruit new people and then get a share of their commission. So
Nice.
then recruit their friends and family to also do it and sell insurance sell insurance products to them.
Yeah.
That really penetrated the German market. Then you have some legislation that the German state really tried to figure out what are the things that have a lot of financial risk, because maybe because German families also became smaller, maybe more quickly than other countries. I don't know. Um, that you didn't
I
have.
feel it's
Yeah.
I feel it's deeper than that. I mean, I don't know. Like, I think it's also just mentality, right? Like, I do think that
Cultural factor.
the Yeah, like, risk aversion, I think, is higher here than in other places. I think Germans are quite cautious compared to other cultures. There's reasons for that, right? Like,
Yeah,
it's not random.
yeah,
There's reasons for that. But I do think that plays a factor.
and
I
also the fact that
I agree.
when yeah, sorry.
What do you think that is? Do you mean are we talking about financial crisis?
Yeah, totally. Financial crisis, like with this big gap that no one talks about in Germany between 1939 and 1945, for example, like which obviously had a big impact on where Germany is today. But I know I think it goes back even further than that. Like like Germany historically, or like the history of Germany, Germany was a very divided place, right? Like Germany only became unified in what very recently. And I was reading up about this Chancellor Otto von Bismarck in the late 1800s, and he's Prussian, right? Like poison, and had they the poison had this like here in Berlin, right? Like we're near this area, and they came in with this like very like as opposed to the other sort of German tribes and Germanic tribe, this very like disciplined approach to society and whatever. And I was reading that he actually introduced like all of this mandatory health insurance, accident insurance, and these sort of insurances. And why did he do that? I thought that was actually kind of interesting. He sort of like actually framed insurance almost as a source of national pride at the time, because what was happening in society then was industrialization, right? Like workers were working in factories, building stuff. The working conditions weren't great, as they weren't in the rest of Europe, and socialism was rising, right? Like the SPD, which actually still exists, right, was really rising. And as Otto von Bismarck actually wasn't lefty at all.
No.
He's actually quite quite a royalist conservative guy. But basically, his way to still stay relevant to the people was by introducing these mandatory insurances, but then create an industry around it, create brokers, like create opportunities to make money with it too. So in a way, he sort of killed two birds with one stone, right? Like he stayed true to his beliefs and political orientation, allowed people to make a lot of money, probably him and his friends, right? But also, gave workers some sort of social welfare and kept the SPD out, right? Or kept them sort of at bay, which I
Yeah,
think is really interesting. And I mean, like just pushing that already from that time, I think had an impact on how Germans view insurance, also what was written into regulation back then, and has stuck, and also I think created like the basis for this whole like broker universe that like exists today,
I
right?
mean, a lot, yeah, it's very true actually, and I think it's a big part of why Germany has such a big insurance industry today. And a lot of those things are still in place today, right? Accident insurance is the reason that your employer usually doesn't want you to drink, right? Or like your way
Yeah.
going home, that you go straight home after you leave work, and so on. Those are conditions still that come from that time, because it's still in place, right? You still have like an accident insurance from your employer that your employer pays for you, but then it has to be on your way from and to work, exactly, or it has to be at work and so on. So those things are still in place today. It's part of your salary that your employer pays, that a lot of people actually don't know about. So if you have an
yeah,
accident at work and you go to the doctor, you have to tell them like that it was at work, because then that accident insurance from your work actually pays. So yeah, which
Yep.
yeah, the insurance market, I think, in Germany is pretty extensive. It's not always super transparent. And Augusto mentioned something that people, are a bit frustrated with insurance, that they believe they pay for something, and in the end, it doesn't pay out. But what we need to keep in mind, I think, is that usually insurance is meant for big financial risks, right? It's
Hmm.
ideally it's protecting you, and that's why we're also talking about it. It's meant to, like keep you from really big financial, topics like bankruptcy, and not pay for like a new screen of your phone. And that's
yeah,
a lot of consumers end up with those insurances, also those insurances of risks that are pretty predictable, and they're
mm,
likely going to happen, like for example your teeth. Most likely going to go to the dentist. There's a huge chance that you do need to have, like teeth cleaning, or like you have some cavities or something. So this is going to happen. So like those type of insurances, they are more like a savings plan, like an
mhm,
expensive, because
yeah,
you pay the insurance company. versus some other insurances like liability insurance. They're usually meant for the bigger stuff, right? And then people complain if it small things.
And I think it's, again, like you have to remember, like, if everyone that bought an insurance company got paid by the insurance company goes bankrupt. So, like, the insurance policy or the insurance company banks on the idea that a very small percentage of people who actually bought it use it. So the main value that the majority of people buy from the insurance is not actually the payment of something they lost, but it's the feeling. It's the feeling of I'm safe, right?
And
I'm
it's the
protected.
protection, and
Yeah,
it's the protection that, to me, that's the key. That's the key thing. I mean, of course, this is what a lot of people buy conceptually. Like, this is, I
yeah,
want to be safe. But if you're thinking about it in a financial planning setting, you're buying literal protection. Like,
yeah, yeah,
you're protecting yourself from, as I was saying earlier, like a million, 2 million, 5 million, money that many people are never going to see in their entire life. It's such a something that can be such a life changing event. And if you're like if you paid $7 a month for several years, you're like, oh, actually, I don't have to pay that.
yeah.
All
It's
right,
But I
and
think,
it's and it is
Augusto,
in those cases when it makes sense, because you're actually pooling that risk, right? Like, if you're insuring yourself against, like, I don't know, having to change your phone, you're going to do it. You can insure yourself. Like, it's this idea of, like, shifting risk. You're shifting risk in time, so you can just, like, as you were saying, make a savings plan. But if it's something that you will never save for, and it's probably like a risk that only a handful of people are going to have, you're pooling, and you can pool in a group of people, and you can shift risk across people. And that's when it makes a lot more sense, and it's a lot a lot cheaper, actually.
then let's talk about what are the biggest financial risks for the majority of people. How
Let's
about
go.
that? Like actual financial
yeah,
risk, right? Not
yeah.
perceived financial risk, but generally speaking, what do you think? Yeah,
I think would also be interesting to then I think let's talk about the risk. I mean, we should wrap up maybe in five, but like then also to bring in how insurance also features in the overall like financial planning sort
Mm.
of
Yeah,
holistic point of view,
yeah,
right?
that'd be fantastic.
all right. It's a question. Like, what do you guys think of biggest financial risk for the majority of people?
In Germany or
Yeah, yeah. Like, I mean, financial risks that most people actually have. You know, what can actually, um, and then we can talk about what's the insurance product
wh-
that exists for that.
by amount of money or by number of occurrences or something.
No, 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 by the amount of money. So for me, for example, what would be like, what should I think about in terms of financial planning, in terms of
Yeah.
can happen to me from a risk perspective?
I guess losing your job, something that should be up there.
Yeah,
Loss of loss of income,
lots of
Loss of
income.
income. Yeah.
Yeah,
Health, health related
health issues.
issues
Yeah,
somehow.
cost for medical expenses, and of course,
Yeah.
if you get
medical
sick, you might
expenses.
also lose your income. So yeah, loss of
Hmm.
medical expenses. Yeah,
Yeah, mine would be legal. It's not because it's common, but because when it happens, it can destroy you. If you have, like, see, if somebody claims against you, or if you need to sue someone for some reason, like, legal fees go up like nothing, and it can destroy you for real. And then you lose, and it's very damaging, I would
all right.
imagine.
So loss of income, legal fees or legal battles, and health insurance. What else?
Natural catastrophes. I mean, in Germany, maybe not, but flooding. I mean,
Yeah,
it's been raining in Berlin since for a month.
when
Yeah,
hasn't it rained in Berlin?
exactly.
I would have rather thought about the Rhine region in Germany, like going like
Yeah,
Sure.
there's been like big floods
meet-
in there.
let me give you some more topics maybe. You know, that you don't have enough money, like how old you're gonna get, like if you turn 130, like do you have enough money to
Retirement, pension, of course.
retirement, exactly.
Retirement. Yeah.
I mean, that's part
Well,
of financial
yeah,
planning. I mean, it's a theory, it's a risk in that case that you grow
it's
super
it's
old,
a
right?
risk. It gets to one of those, like, I see, and I know that there's insurances for that. I get, like, how it's also, I don't know how you can frame it as a risk you protect against, but it's also like something you can plan for, you can save for, right? It's
Absolutely. And then how old you're
it's
gonna get?
it's
How old are you getting, Augusto? Like how much money do you need to save?
how old am I now?
Yeah, no, how old are you planning to get?
I hope a
Planning,
lot.
forget.
I don't know. That's the thing, right? I think another one along that line,
Yeah.
is the opposite. Like you expect, okay, I expect to live 90 years, and then like boom, technology happens, and you live like 150.
Yeah,
That'd
exactly.
be cool. Maybe I don't know.
Well, actually, not
But yeah,
necessarily, right? If you
The
have a
opposite is true as well. If you're like a single earner, for example, and you die early, like in your family is, and you have a family, you have kids. That's another one that is. Uh,
on that line, right? Pension. I mean, most people don't know how old they're gonna get, and insurance just means there is, some people die young, some people grow older, and you
mhm,
pool that risk of, not knowing how old you're gonna get, and then you have actuaries, as you mentioned, that calculate the risk.
yeah.
They then you pay you pay money into insurance. The insurance is investing it for you. Of course, it has some costs. And then eventually, I mean, not talking about if insurance products in Germany are good or bad, but the idea is pretty much you pool money and then you reach a certain amount of money, for example, at retirement age. And then you say, I do want to have either all your money back. That's a lump sum payment. That's oftentimes an option. You do say that you want to have an annuity. So like a
Mm,
monthly payment for the rest of your life. In this case, the amount of money that you saved until this point is being converted. And the conversion has usually a conversion factor. So for example, it's usually calculated in Germany with, for every 10,000 euros, you, let's say, get 25 euros per month for the rest of your life, as an example.
mhm.
And then you just take your 100,000 euros divided by 10,000, multiply it by 25, and then you get the amount that you would get for the rest of your life. And then it's more predictable in a way, right? If you die early, great for the insurance community.
Mhm.
Most times it wouldn't be then paid to your, I mean, different
Yeah.
clauses anyways, but the idea is there's more predictability, and that's kind of the reason why this is useful.
Mhm.
But of course, drawbacks, there are costs and so on. But the idea is really that you pool that risk and that you can predictably know that you will have enough money to
X
live.
amount of money.
all
Yeah.
right, guys. So I think we need to wrap up for today. I mean, obviously a very big topic in Germany, insurance. We have
Mhm.
a lot to say about it. And yeah, there's lots of different types of policies, different
Yeah.
risks, all of this sort of
Yeah.
thing. Very sophisticated market. But maybe just to wrap up for the day, maybe Alex or Augusto, feel free also to jump in. But I'm an international. I live in Germany. What do I do? Like, this is all overwhelming. This is too much. What do I need? How do I get it?
Oh, is that a question?
Yes,
Okay. So generally, from my experience, internationals don't have a ratio of 5 insurances to per person. That it's more like
I hope so.
one. And from your experience, Karim, I know like how long it took you to get even private liability insurance. It was actually a fight, I think, for us to convince you that it's useful.
Yeah, man. 50 euros a year, I think, or yeah, it's ridiculously cheap.
You
It
know,
triggers something, and it triggers something in our minds. It's like, how come is it that cheap? There's
Yeah, yeah.
no,
It's
there's
like
no way
then I
there's
don't
a
need it.
million euros
Yeah.
or like 10 million euros on the other side of this. There's no chance.
I
Like
think, Karim, I don't know
this has to be a scam. It's not, but
if it was like your private liability insurance or your dog liability insurance for Joey. Karim has a
It's
beagle.
also mandatory
No, it's
is
not. In
it?
some states, it is.
in some
Yeah.
states.
In
No, I
Germany.
didn't know that.
Like for you, I think in Berlin it's not mandatory, and I think either one, like it took us like a year or so to convince you to get it because we were fighting. You're like, but working in an insurance company, startup, like who needs insurance? But so how do you do it? I think you could talk to an insurance broker. They would be more than happy to. They do get usually a commission if you get insurance to them. It's not necessarily more expensive. They're different kind of brokers, by the way. Some are independent. Some are actually, some just work for an insurance company like Allianz. So they're gonna try to only sell you Allianz insurance. Some are actually only working with a couple of insurance companies. Generally, I would recommend to talk to somebody that's more independent, that's really a broker and can offer you everything that's on the market. And then they do get an insurance commission from the insurance companies. I mean, that's a whole topic we can talk about, but generally for you, it's not more expensive than Check 24 usually, because Check 24 is also a broker, gets also paid by the insurance companies.
Yeah.
And then you at least have somebody that can help you with claims. and that you can actually talk to. I mean, Check24 has brokers themselves that you can talk to, but like they're also independent ones that I would personally prefer. It's a bit more personal, and incentives I would say a bit better than Check24. They have a weird commission scheme by now. And I mean, of course, you can also talk to somebody more independent that doesn't get a commission, but that's very rare. Like I think there are 100 people that have a license like that in Germany. Do some research and then just generally saying, maybe I just list the main risks for everybody. That I would personally look into. And they're also recommended by Stiftung Warentest, which is like a German assessment independent where like a lot of people Germans get their information from. I would probably start with private liability insurance. Seems like a no-brainer, huge risk. Everybody expects you to have it. 40 euros per person or something, relatively cheap. Health insurance is mandatory, so it's more the question of like private or public. And then the topic of what happens if you lose your income. That's usually something that's underestimated. There are different things, right? The unemployment insurance is usually something as an employee you get. As a freelancer, you have to actually decide to get it. It's a decision that you have to make. And then health-wise, there is sick pay insurance, which is often part of your health insurance. If you short-term, you can't work anymore, you might get supplementary sick pay and then occupational disability insurance. And after that, look into the liability insurances, something like
So
legal.
no,
Yeah.
I mean there's depends. Like also there's some core ones. You need some others. That depends.
Some depend on your personal financial situation and goals.
Yes.
Yeah. So yeah, no, awesome. If anyone made it all the way to here, 56 minutes talking about insurance, I commend you. It's not the most fun topic in the world, but very important in Germany. Thank you so much for listening. This was episode 2 of It's Finance Mate podcast. See you next week.
See y'all. Enjoy.